Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Thursday, November 3rd. U.S. stocks are following the European markets higher after the ECB surprised investors with an interest rate cut. In its first policy decision since Mario Draghi took the helm from Jean-Claude Trichet, the central bank lowered its key lending rate by a quarter point to 1.25%. Economists had anticipated a rate cut over the next couple months, but were not expecting it to come today. However, the ECB clearly wanted to reassure the markets in the face of deteriorating economic data and the ongoing debt crisis. The decision is boosting sentiment among investors. Frankfurt's DAX index and the CAC 40 in Paris are both jumping more than 3%, and the biggest beneficiaries among equities are financial stocks. Europe's biggest lenders are all posting solid gains, and that strength is extending overseas as well. Bank of America is leading the charge with a nearly 3% gain, while Citigroup, Wells Fargo, and JP Morgan Chase are all up more than 1%.
International investors are also keeping an eye on France, where the Group of 20 is beginning their two-day summit. President Obama has said that the G20's top priority should be finding a solution to the European sovereign debt crisis. However, the outline of that crisis is shifting on a day-to-day basis, thanks to the developments in Greece. The BBC reported that the country's prime minister may offer his resignation following an emergency cabinet meeting today. Yesterday, the Greek finance minister publicly opposed a plan for a referendum on the country's latest bailout. The outcome of that referendum will likely decide whether Greece ultimately remains part of the Eurozone. German Chancellor Angela Merkel and French President Nicolas Sarkozy said that the country will receive no more aid until that question is answered.
In addition to that interest rate cut by the European Central Bank, some positive data on the U.S. labor market is also helping to boost stocks. The number of Americans filing first-time claims for jobless benefits fell by 9,000 last week to 397,000. That was a bigger decline than expected. In addition, the 4-week average of jobless claims, a more accurate gauge of employment trends, dropped by 2,000. However, economists say that the number would have to fall even further and remain below 400,000 for an extended period to indicate a healthy pace of hiring. Separately, the productivity of U.S. businesses climbed by 3.1% in the third quarter, a smaller increase than expected. But output grew by 3.8%, the fastest rate since the second quarter of last year, and unit labor costs fell 2.4%, the biggest drop in 6 quarters. Higher productivity is widely regarded as the key to a rising standard of living because it tends to lead to higher pay for workers and larger profits for companies.
On the corporate front, we're seeing the most action in the retail sector. Retailers are reporting their October sales figures throughout the day, and so far, the results are less than impressive. For example, Macy's posted an increase of 2.2%, missing the 3.6% growth expected by analysts. JCPenney also fell well short of estimates, with an unexpected decline of 2.6%. And Gap had another rough month, with a 6% drop in sales. However, there were some bright spots. American Eagle Outfitters raised its outlook after posting better than expected third quarter sales. Those shares are jumping more than 5%. And rival Aeropostale is surging more than 15% after it also boosted its profit forecast for the current quarter. Overall, many retailers said they will continue to stay competitive in their pricing in order to entice shoppers during the crucial holiday season ahead. That's the latest from Weiss Research. Have a great trading day.